very open-minded about trying new tools for these different applications that they're building. So new tools and new applications, I think, is big data.
Okay. When we think about this problem of battery, I think you hit it perfectly. I think the lack of structure in the data is really key, right? Because you have a giant market that's built on top of relational data stores, right? And it's a, however you want to call it, 40, 50, $60 billion market that's built on top of Oracle fundamental. And you have this opportunity now to try to extract meaning from all this unstructured data. The tooling doesn't exist to do that today. And you're just seeing an explosion of new companies profiting off of this in many different dimensions. And Matt's invested in every single one of them.
Talk to him. I also agree that just the proliferation of the unstructured data enabled by, in my opinion, it's enabled by endpoint devices. And so a lot of these endpoint devices have created content that doesn't fit into these well-defined schemas. Mike mentioned meaning. My company that I ended up selling into Autonomy. Autonomy was the leader in meaning-based marketing or meaning-based computing, right? And so I've actually been looking at this kind of problem of trying to get value out of unstructured information without having to use relational or data warehousing type technologies in the past. And I think that now with the proliferation of these endpoint devices and user-generated content, Twitter, etc., you really have hit this inflection point where being able to understand what's happening in the world around you is becoming more real than it was 3-4 years ago. And I think a lot of the applications that we use in our daily lives are enabling that. So I think big data is kind of, you know, the speed, obviously, it's got to be real-time in nature, the unstructured nature of it. And then the 2.0 part, I think, is exactly what Mike and Lee said, which is taking the world of Oracle, which is I'm going to build my app on this enterprise scale-out FTP data warehouse, and I'm going to transition it into some type of unstructured, schemaless environment that allows me to do things that I wasn't able to do previously.
What they said. Actually, I have maybe a slightly perverse view of what data 2.0 or any unitary increment for data means. For us, it's a 2 or 3 order magnitude increase in the size and or the complexity and or the speed at which the data needs to be processed. So by way of example, and I'm probably dating myself here, I remember in the early 80s when it was considered magical if you threw an entire room full of supercomputers at a problem and you could get an answer inside a day of vector compute batch processing. And now we have a portfolio company that literally reconfigures all of Procter & Gamble's supply chain in between stock ticks on about 4 petabytes of data that's more or less fresh every single day. So I don't know whether data 1.0 was in 1983 or 2003, but the kind of demands that we're seeing again along those 3 vectors or axes of differentiation: size of data, required or expected speed of processing, and complexity or richness is really for us what defines the market.
Good. Well, I think that's a great start. I think great comments. I think one other thing that I'd like you guys to comment on, if you think of big data as, the way we think about it is, so there's supply. What's changed a lot is the supply of data has come historically in very limited amounts by the enterprise. The consumers are ingesting data on a feverish rate. And so that is changing quite a bit in our world. So maybe you can comment on the supply side of data, but there's also the demand side of data. When you look at how many end users, enterprises, and consumers are demanding more intelligence out of their screen, it makes it for an accelerated pace of innovation needed in order to catch up. These companies that I can think of that play right in there, more on the application side, companies like Jigsaw, I know Jim's back there, or we have another company in the financial planning analytics space called Adaptive Planning for you to better understand your financial budgeting. Things like that demand a lot of data. So can you guys comment a little bit either on the supply side? Has that changed 1.0 versus 2.0? It seems like it has. And 2.0, and demand, are people really consuming more data in general? And how is that gonna make entrepreneurs more in need to create better companies and more innovative?
Well, I think the demand is certainly increasing. I think this, if you sort of plot the curve of supply, I mean, to Luis's comment earlier, right, it was really down to how cost effectively could we store the data. But if, by any measure, the amount of data that's being created is just exploding, right? So the supply isn't a problem. It's getting meaning out of that data that's interesting. And I think a lot of businesses, especially a lot of enterprises, look at something like a Google or a Facebook and say, holy crap, right? These guys created hundreds of billions of dollars in equity value in almost no time at all. And the way they were able to do it was to take tremendous amount of meaning out of data that was previously inaccessible. And I think the thing that's interesting about this space is you can go into almost any vertical and see where people are making a lot of being able to do interesting things off this unstructured data. You can go from the federal government, the secret three-letter agencies trying to figure out ways to monetize or to extract meaning out of a Twitter stream so that they can track a terrorist cell, to someone like Walmart, right? The Walmart Labs guys are trying to figure out how does Twitter data tell them about customer buying behavior. Pharma guys looking at drug discovery patterns, and then I think on the e-commerce side, trying to figure out how do you make freemium models convert more effectively. I just cannot think of a business that I speak to today that's not trying to figure out some way to make better meaning out of their data. So we just see that as a tremendous opportunity for entrepreneurs right now.
Andy made a great point earlier when he mentioned machines. And I think machines' ability to generate data and log files and unstructured kind of data far outpaces what humans can do.
Absolutely.
So I think that dramatically boosts the supply. In the middle, I think there's a big bottleneck where you need a data scientist. You essentially need developers and programmers to be able to program map-reduce jobs and algorithms and applications to make sense of the data. So I actually think it's less the technology that's becoming the bottleneck at this point and the availability of data scientists that can make sense of that. And I think companies that start to address that bottleneck will be successful.
Yeah, I mean, if you look at EMC, we obviously love the fact that there's more data being generated and it gets to be stored on wonderful systems, like ISON, et cetera, et cetera. No, but
Can I get a Hadoop distro on that hardware?
yeah, we're going to virtualize that, right? Please, VMware. But no, the thing that I find pretty interesting is when you, to Mike's point and to Lisa's point, we made, MC Ventures made an investment in Silver Spring Networks, right? And Silver Spring is taking all that's machine-generated stuff, right? We're trying to make sense of it. We're trying to make it better. And everybody that I talk to, at least, from established businesses, I'm a personal investor, an angel investor in a company called Bonobos, which is Ant's company. Many of you may or may not know. If you talk to Andy Dunn, Andy, who's the CEO there, he's realized that big data actually unlocks a huge potential upside for him, and his new CTO is straight out of Netflix. Right? So being able to really solve those kind of problems, putting people together, and it comes all the way back to, if you think about 1.0, if you will, of this, it's, I think, specifically in e-commerce and retail, you find people trying to replicate the Amazon recommendation engine, like going way back. And when you start saying, well, if I can do that with just something really simple with a product, imagine what I can do if I'm T-Mobile, like T-Mobile is a customer of Green Plums. Imagine if I'm T-Mobile and I can start predicting when people are actually going to leave T-Mobile. And when they leave, how many friends are they going to bring with them to wherever they go? And how can I start predicting churn inside of T-Mobile based on call behavior, text message behavior, those kinds of things. So when you start thinking about the value that you can create using this data, as Mike said, it spans verticals, it spans across the entire enterprise. And I think that's why there's such this excitement about it, and why every company we meet is like, well, we're a big data company. well, really? What are you doing that's so big data? And
You can spell it.
And you can
It's
spell
pretty easy to spell.
Exactly, but I think it also comes down to in the stack where you fall out. Are you attacking it from a bottoms-up perspective? You know, are you going to go? You know, I think Sequoia's a great one. Tengen, are you going that direction, or are you going to come top down and you're going to bring an entire stack with you like Palantir, right? So which way are you going to attack this problem? And if you're a component in that space, how do you differentiate inside of that component base, right? Are you middle layer? Are you SnapLogic? Are you Tengen? Where do you fit inside of it?
So I think the question was about supply versus demand. So we see a huge amount of supply, and with all due respect to Andy's current provisioners of his paycheck.
You won't be.
That's it.
Exactly. As of noon, Andy is announcing his new company.
My new startup.
Exactly. We don't think most folks are going to pay EMC or, for that matter, NetApp prices to store petabytes of data. So as
Actually, I would say that EMC actually agrees with
exactly the question is whether EMC is willing to accept 5% hardware margins.
you. Right. That's a different question.
In short order.
I guess I don't. No.
So if you look at some of the investments on the hardware side that follow Mark Andreessen's software use the world thesis, that Norwest and Sequoia and Battery have been making or thinking about making, you can point to a lot of disruptive innovation in managing supply. But there's a huge amount of stuff around the supply that's also really interesting. For example, security. That sounds kind of grungy and boring, but maybe not to the 1.5 million people who had their credit cards ripped off in the last 7 days by a pretty clever hack of a major credit card processor. So there are companies out there that are proposing to be able to dynamically encrypt an arbitrary chunk of a couple petabytes an hour, and then enforce digital rights management all the way down to the bowels of that massive chunk of data for its entire life cycle. I think that's pretty cool. Verifying the origin of data. So when you're dealing with huge amounts of data, and the bad guys say, "Oh no, really, this train needs to be going on in this direction. Trust me, that's where it's always gone." And you don't have time to parse through 10 petabytes of data. That can have pretty awful consequences. So, flip side of the encryption or digital rights management issue is verifying the provenance of data. On the demand side, I think Louis made an excellent point, which is solving the human bottleneck in the consumption of data is a really interesting place to be. And so we have our fingerprints in just about every group of talented machine learning scientists we can lay our hands on, not just in the US, but in places like the Ukraine and Poland and Western China and India, you name it, because we think that the solution to solving that bottleneck is going to come out of folks working in that area.
So just to pick up on that thread, I think something that we're seeing that I would just plead entrepreneurs to spend more time on is everybody that I see wants to solve the problem horizontally, right? People sort of think in the world of you've got developers, you've got data scientists, which are in very limited supply, and you've got end users, and everyone wants to figure out a way to be like a Splunk or a Tableau where you get to work. Splunk doesn't really work across everybody, they work across a lot of people. But they want to be the whatever for end users, the click for Hadoop. And it's like, look, it's very, very, very hard to build a horizontal platform that works for everybody, because the pharma industry and salespeople and the CIA don't have a ton in common, right? I mean, they have some things in common, and they have a lot of things that aren't in common. The user interfaces need to be very, very different. And one of the things I keep waiting to see more of are, if you think about how the cloud sort of worked its way into enterprise, sure, we had a lot of infrastructure type cloud companies, but you also had companies like Salesforce and Marketo and SuccessFactors and Workday right? And companies that went after very specific verticals and said, we're going to use this cloud technology to disrupt a very specific problem. And it might be CRM, and it might be ERP, but we're going to go after a very, very specific problem. In some cases, people went after very, very, very specific market segments, like EMR, not electronic MapReduce, but electronic medical records. And I think the same thing's going to happen in big data. It's going to take a little while. But we're already starting to see some companies that are going after very, very, very specific verticals, and they're saying, you know, Andy and I are pretty familiar with one company in the CRM space. I think it's going to be very, very interesting when they come on Estelle. They're really saying, hey, forget being a big data company. We're going to solve a problem and use some big data guts or a big data approach to solving these kinds of problems. And I think that's where there's going to be a lot of value in this space, a lot of value to unlock. So I'm looking for a lot more vertical solutions, because I just don't think you can't train data scientists fast enough, and certain companies can afford to pay them, but most of them can't.
Yeah, I think, just really quickly to echo on Mike's point, guys that know how to use the hardware at the bottom cost effectively, understand how to really put the analytics tools in the middle of the big data wedding cake, if you will, and then have really specific SIC code expertise. So they know more about gasoline jobbing than anyone else in the world. And then put that business-specific knowledge together with you know, badass analytics tools on top of huge pools of data maintained cost effectively. Those are the kind of companies that, you know, you don't even read about them in TechCrunch. There's a venture-specific email that goes out every morning from a company called VentureWire. And about once every couple of weeks, there's a company that looks like that, where very late-stage guys buy $300 million in stock from the founders. And everybody I know nods their head sagely and says, yeah, I saw that one, I knew that was going to happen. You say, well, hey, look, jerk, why didn't you invest? It was such a great deal. And the answer is, nobody really appreciates these dirty, ugly, you know, industry by industry transformative businesses, typically until they've already happened. And, you know, listen carefully to what Mike is saying. That deep vertical transformation is going to occur more often and more quickly. And by the way, if you look around the Ukraine and the Czech Republic and other countries like that, sort of kind of middle Europe, you look in China, you look in India, you look in Brazil, not only have their major industries not started doing that yet, but their really great entrepreneurs haven't picked up this hammer of Thor, you know, these big data tools, and started disrupting industries in those countries. And forget the $500 billion data overturn in this country that's about to happen. There's another couple of $1 trillion of disruptive wealth creation around the world that hasn't happened yet. And my peers here have the money to be there. I'm just going to be watching.
You can follow up with hammer of Thor.
No, I'm a wielder of that hammer. I'm kidding. No. What I think, to echo that point specifically, and you know, Mike, Luis, and I have all spent a lot of time together in the brainstorming room, if you will. And one thing, as I start looking at spaces to get disrupted, is I like unsexy things, and I like things that are highly vertical and super unsexy. And the reason I like them is because traditionally that's where you can create these disruptive economies of scale, that you can bring something into a market that you know, when you look back at certain companies that have made an impact, it's like, on the one, you know, in the previous version, it's, man, if I could just have a Google search box for this, it would change my life. And then you had companies that went out and actually did that for the enterprise in very unsexy businesses. Splunk is a great example of that, right? And so, you know, here's one, just to your point about especially, you know, Asia and the growth over there. We talked to a company that has found that a planned downtime for an oil and gas rig is about $3 million a day. Unplanned downtime for that same oil and gas rig, $12 million a day. Right? Just that single one piece of information that's going to tell you or be able to predict that oil or gas rig may go down next week could save you almost $9 million a day. I mean, that's real money, that's real value, that's a huge disruptor. that any one of the, Shell, any one of these, BP, any one of these companies is going to pay a lot of money for. And those are the kind of unsexy, highly verticalized apps that, yes, they're vertical now, but if you start with a platform approach and you build a platform and sell the product, you can actually scale that into other verticals that can piggyback off of that pretty nice.
Just watch out for the 40-year sales cycle.
Yeah, that is true. That's very true. There's no doubt.
Hey, that's a great segue here. I wanted to turn it over to these guys because we're going to run out of time and have you guys ask questions. There's a question.
I can take the floor. I wanted to ask everyone on the panel a specific question about their investment strategies. This is the context of the question. It's always better to have a lot of traction if you're starting off or everywhere. But especially, okay. So it's always good to have a lot of traction no matter where you are. But in the data space particularly, I'm sure you can visualize. What's your opinion about looking at a startup with traction? Someone has a really good idea, needs low 6 figures, 200K, to really do something disruptive. Classically, people always said, go out and do it, and then come back and show me. But now things are really different.
Just talk to
So
Argo.
what's your strategy about that?
No, I mean, in this space, I mean, I think there's an explosion of seed funding. I think we have 5 or 6 investments here that have all been, only one of them has been more than $1 million. And ironically, that was the one that was like 2 guys who had an idea, and we co-invested in it together. But that's continuity, and continuity was in the IR project that we did, and we co-led the deal with Edge Recent. But there was no traction, there was no code. It's an emerging space, so you have to be realistic as a VC as to how much traction you can expect.
A lot of it on the early side, like, 2 guys and an idea, is going to be the traction of that team.
That's right.
Don't forget the dog.
Yeah.
Yeah. The dog is
2
key.
guys and a trick dog. No, that team though, right? They're very, that team had a good track.
Yeah, but I mean, if you can find some attraction, it's great fun, but you can't always wait for it.
I think it's a team bet at the end of the day on the early side, so that helps a lot to these guys' point. At least that's how we think about it.
Yeah, absolutely.
Any other questions?
Thanks, Michael Corrin from Fast Company. You mentioned several verticals and very concrete applications for big data tools. I was wondering if you saw a transition to more about decision making. So looking at problems with a great deal of uncertainty and changing actually how decisions are made in the boardroom or in the field or some other context. I think I'd like to know more about whether you think that's possible and possible in the future, and does that require a change in mindset, not just technology?
I think it's happening now in limited cases, and I think you're going to see more and more of it over time. I think it's just a matter of people in those levels being able to apply this information. I would say, just as a sort of example, sort of codify this quickly in a soundbite, the number of companies that we're seeing coming out of the 82nd Hunter Group in the IDF in Israel, that's the Mossad Special Forces group. Like, these guys have been tracking terrorist cells and trying to extract signal from noise for 20 or 30 years. They now have new tools, and we're starting to see these guys pop out. And it was like, I had no idea that all this stuff was going on. I mean, it makes sense, but I mean, you can operationalize this in other places, right? I mean, it's just a matter of management learning that these tools are available and doing something about it.
Our threshold is learning when teenage girls will abandon Formspring.me in cruel wolf packs. So, kidding aside, when
I'm glad I got
yeah, kidding aside, Mike's making an excellent point, which is there are extremely high value applications, right? And I'm not entirely joking about the teenage girls. Another example of something that we're seeing some Israeli technology applied to is literally finding the one woman whose decision to wear one of those knitted floppy wool Greek fisherman's caps causes J-Lo and every other movie and recording star to wear one within 2 weeks. It's like identifying the source of a viral plague, except for fashion. And if Tommy Hilfiger versus Ralph Lauren gets there first, that can be literally worth $200 or $300 million inside a quarter to them. So yeah, people are already not only building the tools to do this, but the guys and gals in the boardroom are hungry for that decision-making ability. They're not.
Walmart bought Cosmic Labs specifically for this
Yeah.
reason, and Walmart is using Twitter data today to drive their buying behavior globally.
They're not waiting.
They're not waiting.
Please don't write that an ad likes viral plays, teenage girls, and J-Lo, okay? It does something,
All those are Twitter.
but it is true. Just be clear.
I'm willing to live and die by my metaphors.
Hi, Joseph Terry from Meta Optimize. So you were talking about very unsexy vertical specific problems, right? And I'm curious about how this can come about in a scalable way, right? Because the people that know data science don't necessarily have their hands dirty in these unsexy verticals of gasoline pumping. And then the people in these older, less sexy industries don't necessarily know about the potential for data analysis. So how did these groups come together?
I would disagree. I think that the people in the OLED sector, they want to get there. I mean, they know that these things are out there. They don't understand why they can't get there. But a lot of it has to do with, I mean, unfortunately for them, a lot of it has to do with your infrastructure. It's really old, right? And it's stuff that, you know, you're not going to have a connector into these old, weird, proprietary data formats that that get thrown off by X, you know, pick the industry, they get thrown off by X industry. And so there's a lot of work that has to go into actually building the connectors into there as well. Number two, I mean, I think that for sure that solving an unsexy problem is absolutely scalable if you do it in a way that is build a platform,
But
solve
this
problems.
question is also more about how do you connect those people together. And
Oh, how do you connect them?
I would argue that's one of the things that good venture capitalists ought to be doing. I mean, you see, like, I know this market, but I don't know how to solve these problems, and I know how to solve these problems, but just point me in a market. I mean, I run into these guys and girls every day, and it's like, hey, you guys should talk, right?
Yeah.
And sometimes they create companies, and sometimes they don't.
The nature of your question, I think, is something, probably the number 1, 2, or 3 thing that we focus on in the early stages, we all do. Is the technology looking for a market or the market looking for technology? So when you go vertical by vertical, I think you need to have both in order to come up with a company. So you need to have commercial guys that understand the market and they come from the pain point that you're trying to solve, as well as from the other side, the technologists. And like Mike said, I think that's something we could help with for sure across all 4 of us.
Can I ask a quick follow-up question? So at the beginning of the talk, you were talking a lot about finding structure and unstructured data, and there have been a lot of companies popping up right now doing machine learning. Chris Dixon has commented that one of the reasons he found it so hard to find a business model for Hunch, and that he ultimately needed to sell it as opposed to renting it, was that machine learning is too hot. And because it was too hot, no one wanted to rent it. People just wanted to buy it outright. I was just wondering if you would comment on that.
We just invested in a large-scale machine learning platform company. I don't see resistance to renting or buying. I think, and I also think the real frontiers of machine learning haven't been tapped.
It's also machine learning applied to what, right? Hunch is a very specific use case of machine learning, right? You see machine learning in many different applications.
Yeah. So the guys that we're closing this investment in actually are really interesting in that they manage a portfolio of 1,000 patent clean machine learning algorithms on a huge elastic infrastructure. And they actually identify dynamically the algorithms that produce the best clustering or feature extraction or exemption, asymptote identification from the 100 terabytes or petabytes of data that you throw at them. So they're also kind of solving the problem that Mike brings up, which is sometimes I don't know what tool I should use in machine learning, but I know that I have a general problem to identify features in a vast and differentiated sea of data. But I mean, the net is, when there's 7 guys all wandering around claiming to be the next Siri, and they're each solving one specific aspect of a machine learning problem, it says to me that there's a lot more cool stuff to be done there.
Guys, we're out of time, but I think we'll hang around here a little bit for any one-on-one questions. Thank you very much again. Thanks for the panelists, and I appreciate it. Have a good conference.
Thanks, guys.